What legendary investor just bought a lot more of this stock? What is actually going on in the financial markets? What do I foresee happening? And why is he loading up on this stock? What stock is it? And what are my opinions and why he is buying and accumulating as many shares of this business model as possible? Welcome back to Brotherhood Finance. I am your host, Brendan. In today's video, we are going to be breaking down all of that information, so make sure to stay around for that. Again, I appreciate you stopping by Brotherhood Finance. Make sure to smash that thumbs up button down below and subscribe to our YouTube channel. If you have not already done so, I really appreciate you being a part of the Brotherhood team. Furthermore, leave me a comment. Do you own any of this stock? What are your opinions on this stock? Nevertheless, let's dive into this video right now, brothers. All right, so first off, who is this? This is Stanley Druckenmiller. And who is Stanley Druckenmiller? He is an American investor, hedge fund manager, and philanthropist. He is the former chairman and president of DeQuesne Capital, which he founded in 1981 and he closed in 2010. Now, at this capital, he had over $12 billion of assets under managed that he would actively invest for, manage, and increase and get a lot of returns on investment. So again, what did he mainly invest in? He invested primarily in materials, utilities, telecommunications, energy, finance, and a lot of discretionary sectors as well. Now, it's said that he is on average gets about 30% return on investment every single year. If you look at the slide right here, it says he averaged annual returns of 30% for investors between 1986 and 2010. So he's been around, he's been in the game for a while. He knows what key information statistics to look at. He knows what the CEOs to look for. He knows what to look at in a balance sheet, and he can see and tell which companies to invest in and why he is investing in them. Furthermore, let's dive into this. Now, I had to do a little bit of digging. I had to do a little bit of research to see why he's buying so much of this company and where is he buying it from. He now has his own LLC, and that is accounted for at $1.4 billion roughly. So this isn't someone that's just investing a little bit. This is a very well-known investor who has over $1 billion that he is actively investing with 43 positions. Now, if you look at this slide right here, this is a great way to show you kind of what he invests in and what he's been buying and selling. We've kind of had some, pain in the markets recently, but with that being said, he is still accumulating a lot of Palantir Technologies. Again, ticker symbol PLTR, Palantir Technologies. Yes, that is the stock that we're going to be talking about today, and I'm going to be telling you why I believe he's buying a lot of it as well. If you look right here, he grew his position last quarter by 27%, and he now owns 4.26 million shares of Palantir Technologies. And actually, his portfolio is actually going down as he has an average share price of around $17. Today, the stock is trading around $8, and he continues to buy. Why would he do such a thing if he was not bullish on this stock? Now, if you look, he's also sold some other companies where you see the shares and the percentage under that, negative 33.8% for FCX ticker, another negative 24.05 for T-Mobile. So he's not only selling companies, but he's buying the ones he likes, and he's really buying a lot of Palantir Technologies. Now, if you see right here, it says, according to the latest Form 13F, Druckenmiller's family office, which again he now manages after he got out of the brokerage role, recently upped its position in PLTR stock. Specifically, the firm grew its position by more than 27% to 4.26 million shares. That makes it a top 10 holding in his portfolio. Now, also, you need to see that his firm more than doubled its position in Palantir stock. That's quite a bit of confidence from Druckenmiller, considering how poorly the market behavior has been in the first half of 2022. Again, we've seen a lot of things happen, in the markets. I think there's still more pain ahead, but that doesn't mean there's not still great buys in the marketplace. And not only that, like we always preach at Brotherhood Finance, it's about buying low and selling high to be able to increase your return on investment, and it's all about psychology at the end of the day. Furthermore, again, he is a legendary fund manager. He has a cost base of roughly $18, like I mentioned priorly. And meanwhile, the stock is about 80% down from all-time high and 61% over the past year. Now, why is he buying the stock? Well, if you look right here, our total customer count grew 80% year over year, where they added 27 new customers in quarter two, growing over 10% quarter over quarter. So this company is really starting to get more in the marketplace. It's really starting to grow their customers year over year. And although 27 customers doesn't sound like a lot, that's because their customers that are getting on is adding extreme profitability, and it's big businesses that are getting involved in what they are doing. Now, if you look right here, they're also releasing new products such as Hyper Auto, Cosmos, OPIs, Pipeline Builder, and Meta Constellation. Again, this is a data, pretty much a data business that collects data for companies and also helps build softwares and programs and stuff like that. Now you can see here the Foundry and the TAM expansion. They've been growing quite a substantial amount, not only in the communications and stuff like that, but some of the other things that they're coming out with as well on top of their products that they're selling. Now, if you look right here, this is a stock. It's trading around $8. In order for him to break even, it would have to go up about 150% to hit that $18 price target. So he is still bullish. He's still adding. That's not to say he can't get his overall share value down, but it's going to take some time, and I think it will definitely come back once we kind of continue to go down more in the marketplace and then come back out into a great bull market. Now, if you look right here, average revenue per top 20 customers is $46 million, and that grew 17%, in the months ending from June 30th, 2022 from June 30th, 2021. So again, a year-over-year basis, which is quite good growth. Now, their adjusted gross margins is around 80% on average, which is substantial. They are a very profitable business model. So that just kind of speaks for not only are they growing clientele, not only is it growing in the US, not only are people using their data and services, but he is also very bullish on this stock, and he continues to add. Now, where is their commercial marketplace making up? If you can see it right here on this chart, their year-over-year revenue, it just continues to grow anywhere from 30 to 50% roughly from 2021 to 2022, and they're continuing to grow not only their commercial customer revenue service and growth, but they're continuing to grow in the US, which is very imperative. Now, even if we do have some more difficulties ahead in the equities market, the good thing to keep in mind is that this company has $2.4 billion in cash and no debt whatsoever, which is very good to know. If we do continue to go down and we continue to worsen in this recession, they'll have cash on hand to expand and to be able to make it through or grow, which is a great thing to do because as we talked about at Brotherhood Finance, you want to expand while others are contracting. Not only that, they have $950 million in their credit facility as well, so that just adds more and more to their war chest. Now, where's the market cap for this business model? It's at about $15 billion, and like I was saying, it's trading around $7.50, which in my opinion is a great overall buy. Again, this is not financial advice, this is financial education. Now, just a little bit more as we wrap up this video about Planeteer Technologies, and if you've watched this far, please again, make sure to smash the thumbs up button, leave a comment down below. What video do you want me to come out with next? Do you want me to cover stocks, crypto, the overall market? What do you really want to see me address? Make sure to leave that down below. But again, Planeteer Technologies is a public American software company that specializes in big data analytics, as I said, and their headquarters is in Denver. This company came out in 2003, but has been rapidly expanding their growth over the coming years, so I'm very excited to see what it does. What are your opinions? Do you think the stock is going to perform well? Do you think they have a lot of potential overall? Do you agree with Stanley Druckenmiller? Do you think he actually chose a good stock? Do you own any of the stock? Leave me your opinions down below. Again, brothers, that is today's video. Planeteer Technologies stock, PLTR. I really like the stock a lot. I think it has a lot of potential. Thank you very much for sticking around. Thank you for watching the video. Make sure to smash the thumbs up button, subscribe. Check us out on other social media links, and we have our website and other services that we offer as well. We are on Instagram and TikTok. The other founder, ColeNichter, he's going to be on TikTok more often, so stay tuned for that. Much love as always. Have a great rest of your day, a great rest of your weekend. Peace, brothers.